Hi everybody, welcome to my Make You Billionaire Telegram channel, and also welcome to all my YouTube viewers for the wonderful Renko charts, data or importance, and for a good learning too. So today we are going to learn about Renko charts. So main agenda of my discussion today is, first of all, we need to understand why Renko bars are charts and how Renko bars or charts are formed, which patterns we can trade and we can become profitable, importance of 200 EMA or exponential moving average, and for the next day trading or next day trading section, we have to do some kind of a homework to understand what is the trade which we are going to take and which level we are going to take. Everything we are going to look into that. One of the $1 million question in the stock market trading is that the entry price and the exit price. That is a very questions. Even though there are a lot of tools and techniques are there for predicting the entering and exit, still for the Renko box point of view, actually we will see what is entry point, exit point, and we have to calculate all these things the day before the trading day. Let us go directly to the Renko charts and understand. I just opened one stocks or a commodity in the popular discount charting platform here. So here this is a very natural candles, like normal candles. This is not a Renko candles. So here I go and click into Renko. This is called Renko bars. Okay, you can see some two colors in the back, like a red and green. Red and green bars are the green means you can go into uptrend, red means you can come for the bearishness or the sell sign. So why we are talking about the Renko charts is that normally if you look into this type of charts, we may not understand actually whether this chart is going in uptrend or a downtrend, especially if you are taking like a 10 minutes or 15 minutes or a 5-minute trade. Normally whomever they are, the day traders, they can't able to predict what is going to happen next. That is the beauty of this particular trading. We may think actually, for example, just think actually you are here right now and you think actually stock is moving up because you got a big candle, you may think trend it does, people will start buying it. But if you look into here in the next few candles, it is always coming up, right? So you think actually it is going to come back. By the time you enter somewhere, it may go up also. So those lot of retail traders or small traders will get confused because of the normal trading candles. So in order to avoid all the disturbances of the normal candles, we use Renko bars or Renko charts. So how the Renko bars or charts are formed? Normally there are 2-3 methods are using for creating the Renko bars. Somebody uses ATR method, somebody uses traditional methods. ATR means every candle, for example, they put some kind of every day there is one candle, one length is there. For example, if you look into this normal candle, normally every range candle will be like 8 or 9 points will be there for every candles. Okay, there will be some exemptions will be there, but normally every candle will be 8 and that is called ATR. Okay, average to range they will say terminology, but the meaning is every candle will be some length will be there. Or traditional method, they will set some kind of a bar length. For example, this bar length, if you see, okay, this is like I can say, if you see this red candle, it is like you can see the length here. Okay, the high and low here, H and L is written H and L. If you look into this one, actually the high and low is 146.84 and the low is 139.85. For simplicity, I made the calculation here. So one bar length is 6.99 or approximately 7 is the length. Okay, so one bar we set it, or normally as per this discount broker, they set the length for this one bar is like a 7. If you look into some other charts, like any other broker charts, they used to give some other formats like ATR format, ATR 7 or ATR 14. You can set some numbers there. What is the numbers or what is the percentage you are expecting for one bar to be done? That is a fixer. So based on that percentage of the price movement, the one bar will be formed. I will show you how it is done. So this bar length is 6.99, right? So the high price of this particular last red candle is 146.84. so the bar length we discussed like a 6.99. so 146.84 plus 6.99 is 153.83. that we got it. That is the next bar will be handled. So every 7 candle, if it is completely done and closed on the above the price, then only the candle will be formed. One of the biggest challenges for the trade traders or the position traders is that this candle keep on changing. I repeat, this red candle is keep on, or green candle is keep on changing in the runtime. You cannot able to clearly understand whether it is going up or down. Sometimes the candle forms, sometimes the candle disappears. That is the biggest challenges. So you have to understand actually, once this 7 point, the candle got 7 point completed and closed above this particular level, then only this green candle will be fixed. Hope you understand. I repeat once again, from 146.84 plus 7, 6.99, if you add it, above that closing handle will come, then only the next bar will be formed. Then only you can take the position above this candle, and stop loss will be this below. I will come to that how we can do the trade. So you understand how the bars are getting formed and what are the challenges in the bar formation. See, after market hours, everything will be looking very beauty, right? We can enter here, we can exit here, we can exit here, we can buy from here. A lot of things are very easy after the market hours. But as I told you, day trading, this candle will be disappear and coming again, disappear and coming again. So it will mean a lot of confusion. So you have to be crystal clear understanding how the bars are formed, when the bar will form, and when the bar will be fixed there. That also you have to clearly understand about it. Next, which patterns we can trade and become profitable, and importance of 200 SMA. So before we take it to any trade, you have to enter into a trending stock. I repeat, you have to enter into a trending stock. Trending stock means that is what we use the importance of 200 EMA we are going to use. I just add here a moving averages, a magic number called 200 here. Okay, and for the time being I just add the normal candle. So this is the 1 day candle, I just used it here. Okay, so 1 day candle, it is below. So if you look into like I will take like 1 hour for the understanding more better. So if you look like a 1 hour time frame, this is a 200 SMA or simple moving averages. The price is above this. Whenever the price is going to above and stay there, you can just think actually it is coming from below 200 moving average and it is going to 200 moving average above. That means you are entering into a buy setup of this particular Ambuja cement. So again, go to enter, because every day if you can see it here, one day or another day it is like a gap down, sometimes gap up or pull up, everything is happening here, right? Even though it is above 200 SMA, you can still think gap up, gap down, gap down, gap up. You make it confused with this particular candle, what to do and how to do and all. So for this purpose, so we understand from 4:15, you can say date 4:15 onwards or 4:16 onwards, we are into buy setup. So I just move into a Renko setup here. Okay, so Renko setup, if we use it here, if I come here, I have to see where exactly I have to enter. Okay, so 4:15 means this is the one. I can buy here this one. If you are a day trader, again use 15-minute time frame. So whatever time frames if you want it, you can use it here. So this is clearly understood. I think we have more for 50 minutes. So you see here, so from 4:09 onwards you got a trend. Okay, so this is the buy setup. Where to enter, how to enter profitable, I will tell you. So now if you see here, this is a trade. I'm going to tell one trading strategy to you. So you see a 200 moving average here, and you see some zigzag here, right? So for example, W or M formation, something you can see here, right? So you have to enter above this line and draw here. Drain along here. Yep. Hope you can understand it. So I'll drain along here. So above here you can enter. Okay. Suppose you think you missed this particular thing, you want to enter it again. Then this is another way. Above this one you enter, and this is a stop loss. And this for entry, this is a stop loss. This red bar is this is a stop loss. And if you enter here, below this is the stop loss. Below this have to come and one candle have to come and close, which means literally this is a stop loss. Got it? I think you guys understand it. I'll repeat once again. First you go and take the candle, whichever it is there. Just take the normal candle, like a 1 hour candle time frame, and just see actually whether it moves from below 200 moving average to the upper moving tail. It is already like from here onwards it is like 410 or 4, yes, 412 it is going to coming up, right? It is in buy trend. So for the intraday trading, you just go and select the 15-minute and convert this one into a Renko charts. I just remove all the lines from here for the time being. So you can clearly see the price is from here, the price is below 200 moving average, right? So here if you see, the price is coming above 200 moving average, and 1 hour normal candlestick previously we saw that is also coming into buy candle. So for the entry, we see a W or a M candle. You see a M candle here, something. So it is breaking out, right? So you put an entry here. I again drawing here. This is a above buy entry, and this is a sell price below here. This is a sell, so stop loss. And if you can enter above this one also, and this is a stop loss, you can enter. So easily if you enter from here, if you see 162 close to 10 points, you got it. Close to 10 points, you got it. So like this, you have to enter in a trending stock. I repeat, you have to enter in a trending stock. So daily, my last topic here is that, so daily you have to do this homework. Daily, whatever favorite stocks you have to enter into a trending stocks, and that trending stocks you have to identify and you have to catch it before it. Okay, so you have to closely watch it, this particular thing, or set alert prices. There are various softwares or various tools are there. You have to set alert so that you will get this particular information, so that easily you can get like a 10 points or 15 points, and then easily you can trade it. Okay, so normally I used to post all the calls in my Telegram channel, so that you can also get this particular candlesticks, and you can see how it is getting formed, how it is getting trading, or what is the risk reward, everything you can see it. You can join to my Telegram channel also. If you are a new member into my YouTube channel, if you like this particular subscription, please subscribe, which is showing in the below one button is there. Please subscribe me. If you have any query, you can post it in my comment section. I am ready to help you in whatever way I can. Thank you. Thanks again visiting my channel and visiting my YouTube.